All right. So this is the StockTots weekly review for the week of July 27th to July 31st. So let's talk about last week as usual as we start on this weekly review. Last week was exactly the week we predicted it would be, very choppy. Actually, we predicted this Tuesday to Friday. Monday, we had a lot of bullish signs, a lot of technicals looking really green. So Monday, I made the mistake of taking small starters into many different things, which I did 2 weeks ago, and it ended up in losses. So I had to cut those almost immediately. Some of them, well, most of them I held, but they weren't that big of losses throughout the week. But unlike 2 weeks ago, but yeah, I definitely need to stop going in heavy. I have to focus on the trading plan again. I have to focus on my risk management again. Um, but yeah, I definitely will be doing that this week, and also just like the previous week, the week that we just finished, we've been day trading a lot more than swing trading, especially options. It's just not the best of market cases. Especially last week, we had so many big companies reporting. We had Microsoft, we had Tesla reporting as well. So you know, um, plus, we had stimulus news, we had coronavirus cases news. These will continue to make a very choppy market, especially for the Nasdaq. Tech was not leading last week. It was mainly the stocks in the Dow, so like airlines, food, like restaurants, cruise lines got a pop if I remember correctly. So that's going to be the focus again this week. Tech may, I mean, there's so many earnings this week. Let's get straight into the earnings. We have McDonald's, MMM, Pfizer, AMD, Visa, eBay, Starbucks, Shopify, Facebook, PayPal, and much more. Amazon, Apple, MasterCard. Amazon, Apple is going to be Thursday after close. That's going to be a huge day. Um, but this whole week is going to be loaded on earnings. So we'll see what happens. It's gonna be we're gonna play it a much safer in terms of swinging. We're gonna be day trading a lot more. Swinging at the very least, we'll be taking pennies. Any pennies worth swinging based on charts, even shares. Like let's say maybe taking shares of Apple or AMD. I'd only want to swing options. We've had really unsuccessful tries, even with our strategy, the past 2 3. I would say about 3 weeks. With swinging options. So there's just no need to especially with earnings season at full force this week. There's no need to force swing trades. So we're just gonna play it safe. We're gonna wait for August. There's gonna be so many more opportunities in August, as there always is. After choppy weeks. Choppy weeks is just the name of the game. There's gonna be choppy weeks maybe once every 2 months or so. Maybe like two choppy weeks every 2 months. That is how the market has always been. So we just gotta wait for it to pass over. Um, but yeah, and looking at earnings, I mean, me personally, I've taken some YOLOs for earnings, like just flat out naked calls or puts. Almost every earnings season. I don't think I'm going to stop this season, but I mean, I'm looking at AMD, um, McDonald's, Facebook, Boeing, Shopify, PayPal, Amazon, and Apple, and maybe UPS as possible companies that I'm playing. AMD, we're probably looking at a Condor. Even if they had really strong earnings, it's probably priced in, especially with that ridiculous 20% move yesterday or Friday. Um, so yeah, we'll see. I mean, just looking at this, it's gonna be pretty hard for tech to move again. It's gonna be all over the place again. So we'll be playing it safe. Um, Economic events, nothing too major. Give me 1 second. Yeah, nothing too major. Consumer confidence index Tuesday. That should shift the market a little bit. The Fed talks on Wednesday. Fed will probably talk throughout the day Wednesday. But the main one is obviously FOMC. Powell talks at 2. Well, the headlines come at 2. He's going to talk at 2:30. Jobless claims as usual. Jobless claims last week went up rather than going down. So we'll see how this goes for the jobless claims. And then Friday, consumer spending. I think just consumer spending is another report. Shouldn't be too impactful, but yeah. So the main things that will impact the market this week, there's headlines, are unemployment claims, FOMC on Wednesday, and maybe the consumer confidence index slightly. I don't think that's going to be a big impact, as it has not in the past, not as impactful. And of course, we have stimulus news coming up Monday. Um, have something to watch out for. We may have some China news. You just never know. But this week, I think the stimulus is going to be very important. Market's going to be really focused on stimulus. So, yeah. Stocks to watch. This hasn't changed from last week. I mean, I haven't really looked into much. Honestly, the best way to play this week is going to be looking at it by day. Honestly, by the hour as well. Stocks that are breaking out, any news, depending on our earnings due in the morning, it's going to have a impact on how the rest of the day goes. So there's I just found no need to update the options watch, pennies watch that are Corona only. Let me fix this. These are always going to be on watch, honestly, for the next like 4 or 5 months. To be honest, I mean, we'll add some more, obviously, depending on any headlines that come out, any vaccine news that comes out. Yeah. Non-Corona pennies. These were just the ones that were hot on Friday. Also, technically had some like momentum going its way. DPW, NOVN, HHT, AREC, ASNA, UAVS, MIST, and SPAC. SPAC is a merger company. Also, I wanted to add Mogo. We traded Mogo for profit. We're probably going to keep looking at it again. Also, IBIO. Yeah. So, yeah, but I know you guys had some questions, so let's go over these questions real quick. All right, how are you supposed to know if a stock is momentum like AMD? Well, for AMD, just kept on making highs of volume, and like Ryan mentioned in the morning, it was based off that Intel news. I think Ryan, do you remember the news from Intel? Like, I think they stopped doing something. What was
Yeah,
it?
their 7 nanometer chips are going to get delayed a year and a half.
Okay, yeah. So basically, all the other chip makers kind of got a boost. AMD in particular, obviously with the 20% boost, which probably will come down, but we'll see what happens tomorrow. Um, any indicators to get that momentum? Not really. I mean, AMD just kept on making highs off this extreme volume, more and more. Like every volume candle that closed on the 5 minute, even the 1 minute, was always above its average volume from the pre market. So we know it's just gonna keep on going and going, making highs. Um, just no signs of slowing down. Um, but yeah, I mean, there was no particular indicator that, I mean, at least for my strategy, that would have, you know, uh, it's pretty much just making highs. Especially, also AMD made all-time highs. So once a stock makes all-time highs, there's no overhead resistance, technically. So, yeah, a lot of buyers saw that. A lot of buyers took advantage of that. All right, next question.
Real quick, just to add to that, I think you said a lot of good stuff there, 301. One thing I did see during the day was a lot of unusual call activity, and it was happening throughout pretty much like all the way through lunchtime when AMD was running. So, new call sweeps continued to come in, and so seeing that continued action showed that there was still more bullish behavior pumping it, is one thing I noticed.
Yep. Yep. That's a great point. Totally forgot about that. All right. Let's see on that. Okay. Next question is a scalp play that a stock is already up 4 bars or so. Sometimes, how do you know when to enter? Um. Well, let's see. How do I answer this? I'm trying to think how I would trade this. For example, AMB had continuous bars, but the thing is, like, once it broke that all-time highs, like, as long as it maintained that volume coming in, you could just try and wait for a small pullback, but stocks with this much volume, this much momentum, they will not pull back, um, unless obviously news, unless unless there are more selling volume coming in on a candle, then they'll pull back heavily. But sometimes you just gotta send it. I mean, to be completely honest with you, so sometimes you just gotta send it, especially with AMD making already all-time highs. Um, Even though it had so many green bars back to back to back, you just had to send AMD, especially with the volume just coming in, asks being cleared almost by the minute. So um, yeah, I'm usually on a stock that doesn't make all-time highs, multiple green candles, it's naturally going to pull back, especially at any resistance or support zones. Um, so, but AMD was a very unique case, and most of us took advantage of that.
One thing I can add to that too is you could step up the time frame. So if you're seeing, I don't know what the 4 bars you're measuring, if it's the 5 minute, the 1 minute, but if you
I,
look back at the 1 hour or even the daily and you see that it's still not uh, overbought, then there's potentially still room for it to run.
right, yeah, and I think that 4 bar, like seeing multiple bars together is more common on the 1 minute, maybe even the 5 minute. But usually when you're day trading, that something that's not a penny stock, a 5 minute is ideal. Um, so especially for AMD, if you see a 5 minute candle closing above, that's potential entry zone. So, all right, next question. All right, so he wants us to draw out eBay and Cloudflare. All right, let's do that first. All right, let me put the chart for. I'll actually post the chart after I make it. Let's eBay.
eBay's got earnings this week,
Yeah, I was gonna say
so
that.
I didn't see too much. They've been positive earnings and negative earning moves even, so 6 times positive, 6 times negative in the last 3 years. Um, their implied straddle is 7% this time around, and they've beaten implied straddle. Let me just pull it up here. 3 out of 12 times. So nothing specific from a historical perspective that really stood out to me. But we'll take a look at the chart. 301 will draw it up, and I'll throw it on the recording.
Yeah, AMD. I mean, nothing too special. It's on support here on the hourly. Move a little bit bigger time frame. Actually, this is the 4 hour. 4 hour looks a lot more decent here. Uh, yeah, sitting right on the 50 EMA here. So, all right, give me a minute. All right, post this in the options chart. Nothing crazy on eBay. It bounced off the 50 MA on the 4 hourly. Also on a micro support on the 4 hour, which happens to be that EMA. That a wick is a reversal wick. I forget the exact term for it, but eBay looks to be going up. And also we have earnings coming up this week, so could get an earnings run up, a small earnings run up again. So yeah, it's looking more bullish than bearish to me at this point. We'll see if we open under support, open under the 50 EMA. What's the other one? Nets, Cloudflare. Let's see. Cloudflare looks a little tough to draw, but we can draw this out. All right, Cloudflare is nothing. I mean, it's nothing specific. Well, nothing exact, but we have multiple candle closes under the EMA. It's still forming. It's still holding the support area. Even though it's kind of like a sketchy support area. It hasn't been forming any lower lows. It's still kind of, just hanging in there around this 35, 36 area. Um, so right now, I'll probably be neutral on Cloudflare, mainly because tech and security has not been doing well as well. But just technically, it's not a clear direction at the moment. Even if we look at the daily, well, the daily proves my point. We're kind of on the support zone. Um, yeah, and same with the hourly's holding the 200 MA. So yeah, we're kind of neutral for now on Cloudflare. Let's see. Let's go to the next question. Um, one of the winning day trades we took on a red day. We had multiple winning day trades the last week. Swing trades are not always that successful. That's why we stayed away from them after Monday. But we could talk about space. Space was I was actually I'll open my TD Ameritrade. I always have a bad habit of not opening it real quick. Space. What date was it on? Check. All right. So space was on the 21st. All right. So space was an entry on off of a high of day. So at 9:58 a.m. was my first entry. I got the 26 call. My first entry was at 128. My second and third entries are both on a 131 for the contract. So I got the same weekly expirations. July 24th, got the 26 call, not too far out the money, and I filled him at an average price. I would say maybe 130, maybe even 129. But yeah, and I bought this pretty much at that high of day breakout. Once we broke out of the high of day, I bought more a couple minutes later. So I guess that's just me just adding on to my position. But that was just a high day breakout. Looks like we also got a big volume boost around 9:45. Um, yeah, and that was just a nice dollar and 20 cent run up on the stock, and for us it was around 22%, 23%. I sold mine at 154, 157, and 156. So about I think that's 20% if I'm doing the math correctly, maybe 18%. Um, yeah, so that's pretty much a nice easy trade. Spotify. Just looking at the option alert. Spotify. Let's see else on the 22nd. Let's see what this was. Spotify. Uh, Interesting. So Spotify must have been just an opening candle play because throughout the day it wasn't that bright. But yeah, we'll skip Spotify. Let's do um we could do Square. Let's do Square. So I'm trying to figure out what I posted and what I did because I have so many day trades, so many trades in general. Let's see. Square was on the 20th. That's a Square. Okay. So Square. I'm drawing it out on the 15 minute. Let me take off the EMAs here. I think this was purely technical. All right, I'm drawing it out. My entry was the 20th. Let's go to the orders. All right. Here. Oh shit. Oops. All right. So Square. Um, looks pretty obvious to me. It was a 15-minute pennant breakout. Or you can even call it a wedge, but actually it's more of a wedge. My bad. It's more of a wedge. Descending wedge breakout. Especially with that opening candle, we saw a nice run up, about a $4 run up. We saw a flag breakout again um, towards the afternoon. But yeah, I scaled my square multiple times throughout the day, um, just basically based on all technicals. So yeah, it was a nice descending wedge breakout. Nice and easy. See any other questions? Uh, yeah, I mean, I feel like a lot of people are just focused on indicators. Like they're just trying to find, um, like I don't know. Like I mean, when I also started trading, like I was be obsessed with indicators. Just trying to find like just trying to find the secret. I mean, there's honestly really no secret. It's just like you just have to mix and match. I mean, I don't use that many indicators on a daily basis. I mean, I use some of the ones that I've created myself, but I mean, most of these that I'm focusing on are all technicals, like any shape breakouts, support resistance breakouts, um, higher than average volume. What else? The news, like I mean, indicators are important. The MACD, EMAs, VWAP, but it's B bands. Like they're important, but they're not make or break. There are many other factors that have to come into play. They have to combine together to have it um, make or break. But yeah, I mean, this week we're going to be focusing pretty much the same things. Pattern breakouts, support resistance, higher than average volume. Pushing highs, pushing lows, things like that. We're just going to be focusing on that this week for day trades. Um, Swings, as I mentioned earlier, we're going to be trading pennies. Maybe even shares on some large caps. For people that can obviously trade shares. Um, yeah, just keeping it at low risk because we've learned our lesson last earnings week. So no need to go overboard. No need to force trades. No need to lower your probability of successful trades just because you're trying to make an extra dollar. It's just not worth it. There's gonna be more trades coming up in August, so that should be our focus. But yeah, that should conclude the weekly review. If you guys have any other questions, you can DM. It's probably better to just add me in chat DMs. I haven't really been um, responsive in DMs. I've been pretty busy recently, so yeah, just add me in chat. I'll go through it when I can, and yeah, we'll see. But have a good weekend. Have a good rest of your weekend. We will see you tomorrow morning for first week of a really hectic earnings week. So
Yeah. Before we close, I
yeah.
want to just address Chill's question in chat as well. It's a really good observation that there's been
Oh.
a lot of stagnation around earnings season, and I would say the way I would categorize it is really more choppy. Like we're seeing a couple things come together, which is a lot of tech companies. It feels like they've sort of run up their course and they've almost gotten ahead of their earnings and the expectations for the rest of the year. We're seeing rotation out of technology into other industries, travel, industrials, energy that were really hurt over the last 6 months. And so I think the way I would categorize it is really choppy. We saw what happened to Intel. We saw what happened to Netflix from a technology perspective. And then we have a lot of energy companies, ExxonMobil, Chevron, reporting this week. So I think really earnings, if anything, are going to be even more of a gamble this time around, but certainly a lot more potential for really big swings. Again, talking about Intel and just how they were down like 16% on the
Hmm.
day was nuts. On the implied straddle on that was like I think like 6 or 7%. So going forward, I think a lot of companies they're still withholding guidance, and so it's I think not having guidance and not having a measurement for the next time makes it tough to really create some action around the stock itself. unless people are just taking profit or they have some bad news, like things are delayed as a result of supply chain and so on. So I think what we're going to see out of earnings and what that's going to mean for the economy in the future is just a lot of chop. We might not see a crazy run or a crazy drop, but really just money being moving around, but really just staying in place. That being said, this week is huge. Facebook, Amazon, Apple, Google, all reporting, and those have a huge impact on the S&P 500, huge impact on NASDAQ. So that alone could definitely shake things up.
Yep, absolutely. And sorry, Show, I added to your question, but thank you for Ryan for answering that. And also to add on to that, you asked, is it a matter of time when the economy will pick back up, or can we really determine when? But is there any particular way to approach the market after this earnings season? So historically, from what earnings season has always been choppy. The market has always been choppy, and after that, we've had um, unchoppiness where we've seen tech running. Obviously, we've seen different sectors running. So for now, since we're right in the middle of earnings season, we should take it day by day. But after is when we start to see things pick back up, and naturally we're going to go for those. But right now, we just have so much chop with the earnings. Um, just in general, just like tech. Also, 2 weeks ago was pretty overbought. We had Apple making new highs. We had everything making new highs, right? So that contributed to the chop, as Ryan was mentioning. But for now, we should take this day by day. And honestly, the best approach, especially for you and Micho, and also a lot of people in here, it is day trading. Um, yeah, just straight up day trading. I think it's we should continue to take advantage of it. I mean, obviously, when the market is not going to be choppy, day trading will still be big. But right now, I think the sole focus should be just day trading, whereas swing trading is going to be much more difficult. And historically, the chop does go away. Chop only happens every couple of months, if you've seen. So yeah, so we'll see. We'll see how this goes. But I think we should just focus on Monday. We should focus on after Monday. We should focus on Tuesday. After Tuesday, just Wednesday. So on and so forth. Just for this week at least. And then probably next week too. I think next week is another big earnings week. Let me check this real quick. All right, next week is August 3rd. It's the first day. Let's see. Yeah, next week is also going to be huge. Just looking at Monday, we have Game Studios, we have Chegg, TTWO, Chegg, Space, Fang, another energy stock, Ring Central, AIG, Insurance, Texas Roadhouse, Restaurants. That's Monday. Tuesday, nothing in the morning. We have Disney, Beyond, ATVI, Twilio, ENPH, Paycom, Match, Planet Fitness. So that's already a big day, Tuesday after hours. Wednesday morning, CVS, Moderna, Wayfair, etc. After hours. After hours also again big for tech. Roku, Square, Etsy for e-commerce. Zynga, Jack in the Box, WDC. Thursday. Wix. I mean, yeah, sure. Online software. That's Wednesday, Thursday morning. Thursday afternoon, you have Uber, DDog, Groupon, Dropbox, Stamps, Zillow, Cloudflare, T-Mobile. Yeah, I think Friday should be. Yeah, so not much. So yeah, I mean, next week won't obviously be as hectic as this upcoming week, starting tomorrow, but still a bunch of big companies reporting throughout the week. Um, yeah. So I mean, that should conclude the weekly review, guys. Any other questions? Let us know. Again, we're going to take a very safe approach, as I mentioned like 30 times during this review. Safety is always should be key. Trying to conserve as much capital as you can. That's a mistake I made years ago, and I also find myself still making that mistake once in a while. I mean, you just have to grow as a trader. You'll never be perfect. You'll always make mistakes. As long as um, look at your mistakes, find your mistakes, and analyze them, right? Then you should be in good shape uh, as your trading journey grows. So, yep. So yeah, see you guys tomorrow. Have a good rest of your weekend.
All right. Thanks everyone. Thanks everybody.
Yep, peace.